This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Open-Top Scrap Trailers, June 24th, 2019.
U.S. steel production rose to 1.887 million tons as the U.S. and global economy remains in a slow growth and even contraction mode in some areas of the world. Oil rose to $57.43 a barrel due to tensions in the Middle East, including the downing of an unmanned $130 million U.S. drone by Iran. U.S. oil production fell to 12.2 million barrels a day, near the record. The trend remains up as added infrastructure is put into place to move oil out of the oil fields. Iron ore rose to $118.50 a ton, a 5-year high on mine shutdowns in Brazil. This is a major problem for steel mills. Scrap steel number one heavy melt was steady at $235 a gross ton, a multi-year low. There remains upward price pressure due to high iron ore prices, but major downward pressure based on slack domestic and export demand. Hot rolled coil steel fell to $25.54, a new multi-year low as imports grab market share and on a slowing economy. Copper rose to $2.70 a pound, but remains low. Hopes of lower interest rates has brought some economic optimism to some markets. Aluminum also rose slightly to 78.8 cents, remaining near the multi-year low, but with some being optimistic of the future. China announced new major cutbacks on imports of copper, aluminum, and ferrous scrap. This will cause a new level of at least temporary disruptions and lower prices in markets. Nucor, U.S. Steel, and Steel Dynamics all announced very downbeat second quarter earning estimates due to declining volumes and price erosion. A very bad sign of things to come. The U.S. Federal Reserve, which sets interest rates, met and released a statement that in summary said, job growth remains strong, but economic activity is slowing while inflation remains less than the 2% target. Also, business investment has slowed in the first quarter, so the Fed may soon reduce interest rates to help the economy. June's U.S. manufacturing index fell to 50.5, its lowest growth, and pointed to the weakest expansion in factory activity since September 2009. Output rose at the softest pace since mid-2016. Note, anything under 50 is contraction. June's New York Empire State Manufacturing Index, a key economic indicator, fell 26.4 points, the largest monthly decline ever due to declines in new orders and employment. June's U.S. Home Builders Index fell to 64 from a 7-month high and remains at an okay level. Low interest rates will help housing, which will put upward pressure on commodity prices and support high-wage jobs. May's U.S. housing starts fell slightly to an annualized rate of 1.27 million, well below the 60-year average of 1.4 million and less than half the all-time high record of 2.5 million in 1972. More housing brings more high-wage jobs. Wall Street's Dow Jones average was up 629 points to 26,719, near the all-time record, as the U.S. Fed may soon lower interest rates due to the slowing economy, and China trade news was positive.
As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.